This is Bossman from Swing Trade Snipers, and I'm back again with another video to help you improve your trading. In today's video, we would like to show you guys how to get paid off of real cheap option contracts and what to look for to do it. Okay? Now, before we go any further, I just want to make this statement. This is after you learn how a candlestick actually moves, okay? Because as I told you guys before, candlesticks tell a story. Y'all just haven't read the book yet, all right? And I'm trying to give y'all chapter after chapter after chapter the best way I can, all right? So now, when you learn the way these candlesticks move and you see certain things that happen in your charting, okay? And you know it's going to go up or down, plus if it's going to be an expansion day or a consolidation day. You have to learn these things. Like for instance, if it runs up real hard, like $8, $9 in one day on SPY, the next day is probably going to be a consolidation day, okay? Or a pullback day. So you want to wait till that you see that expansion day. That's number one rule, okay? Number two rule is, if you look at this chart right here on this side, this is one chart over here, and this is two chart over here, all right? This chart right here shows that this was right here, was 23 cents. So in the option market, that's $23, okay? You could have bought this contract right here on Thursday night, all right, before the market opened. If you seen your, if you learn the way the candles is going, right, you would have just took a shot and you put this in $23. That's it, right? My point is, do you see how much it went up? That stock went up. I mean, that went up to 178. Okay? So, what you have to do is, all you have to do is deduct your 23 from the 178. Okay? And you get what? 155. So my point is, you could have made $155 off of $23. Okay? That's what? Over almost 5 times your money? Yeah. But my point is, you could have hedged that too. And you could have brought another contract on the put side just to protect it and get another one. Usually what I do is I'll get 2 of them the same price. Now here's the trick. The stock that's, if you get them both around like the 50 cents and under, you know, because you know your candlesticks, it's going to run one way. Okay? Once it starts running, you know, usually once you learn your candlesticks, how far it should go. Okay? Now, you want to, once you're in, it doesn't matter that it's going to be, we want to do the same day contracts, okay? That's why you're able to get this 155 so fast, because nobody wants those contracts because they're scared, because they don't know the candlestick. You know the candlestick. So now you're getting paid off of it, and it's going to keep running until it gets up there. And what you want to do is I put an open interest in my watch list so that I can see the open interest on this contract up here. So it lets me know if people starting to fall off, if they don't want it no more or whatnot. Now, as long as it's going up, they're going to want it. It's SPY. Everybody wants SPY contracts like that. These small ones have the most open interest. Go look at the 50 cents and unders, 20, 30,000 on the same day contracts, okay? Now you can buy them same day contracts because you know where it's going. Now, let's say if you didn't know it was going, you know it got to expand, right? So as long as you know it's going to go up or down in an expansion move, you can actually get say 23 cents on this side. But guess what happens? This side you're going to lose, but this side you're going to win. So you'll lose 23, but make 155. You see what I'm saying? That's the key. So even if you had to do that, you still up 120 some odd dollars. Just because you knew that it's going to expand and you get the same day contracts. So that's a little trick that you can practice in the option market. If you don't believe me, go to on demand and try it. Go look at a day where you see an expansion like this right here. Okay? And go back to it. Go right to this date and time and put it in and get your contracts and see what happens. And y'all will see what I'm talking about. It's just a little hit. Now, if you risky, hey, you can put in $100 right here. That'd have been 5 times your money. Same move, same jump shot. Just you bet more because you know where it's going. And you can use this. I said low money because, you know, you can sit there and, you know, that's just taking a shot. It's only $25. If you lose, that's an easy, you can get that back with no problem. But if you win, you're getting that expansion win. Okay. Now on this side, this contract up here was a little more. This one went from $681, y'all. $681. That's how much it was. $681 up here, down to 39 cents. So if you knew it was going to put right here, which honestly, if you would have looked at this, you could have seen it was going to put, because if you look right here, we know candles. You see it first hump right here, it didn't cross up here. So that's our first signal that we dropping. Then you got another pullback to stop right there, not the wick, the body. You see that? And then we went up again and came down. What is that? That's your 3 humps. Okay, was it Elliott wave? So now if you would have caught that right here somewhere, you know what I mean? You could have got in there at about, what's that, 561 or something, 62? But my point is, look what you would have got. You could have brought that stock back at 39 cents and made all that money in between. Now this is a little more riskier because you're putting up hundreds of dollars. I'm gonna be honest with you. But you know, once again, once you learn how to play those ways, you're not worrying about the money. The money is like, you're gonna get that back. Money is nothing but ammo to you now. So, you know, but the key is, even if you do, you're putting the stop loss in. So even if you was wrong, the first thing you're gonna do is, if you're getting in here, you're gonna put your stop loss up here. So it might take a little bit, but if it hits, you see what it's gonna hit, and you would have bought that thing back and got all that money. So I just wanted to hit that real quick. I'm gonna be giving y'all a bunch of little option tricks, you know, that y'all can do and try. And like I said, if you don't believe me, go on demand and try them. So this is Boss Man from Swing Trade Snipers saying I holla. And remember, if you don't know where the liquidity is at, aka money, you are the liquidity. This machine will tear you behind up. Learn it. Holla.